This call is for informational purposes only and is not intended to be, nor should it be construed or used as, investment, tax, or legal advice, an investment recommendation, an IRA provider recommendation, or an offer to sell, or the solicitation of an offer to buy any digital asset or security. Clients of Grayscale may maintain positions in the digital assets discussed on this call. Any opinions expressed throughout this webinar are solely the opinions of individuals and do not necessarily express the views or opinions of Grayscale or any of its affiliated entities.
Hey everyone, I'm Sean Farrell, head of crypto strategy here at Fundstrat, and I want to thank you all for joining. I'm excited to be here today with Zach Pandel, managing director of research at Grayscale Investments. They're one of the leading firms bringing digital assets to institutional investors. As you all know, this has been the institutional cycle for crypto, and so it's great to get their perspectives on all things really. But to set the stage before we bring in Zach, we're going to take a step back from the day-to-day price action today and take a deeper look at Solana, particularly through the lens of Grayscale. Um, and they've been critical at the forefront of bringing products, to allocators through traditional venues such that they can get exposure to crypto assets. We've seen a wave of ETF filings and approvals this year, and among them was Grayscale's Solana ETF, ticker is GSOL. So again, our focus today is going to be on Solana's role in the evolving crypto landscape, some of the secular tailwinds that could drive its adoption over the next decade, and talk a bit about how Solana maybe stacks up to its competitors. And of course, we'll talk about some of the specifics around the ETF itself. And so with that, we'd love to bring in Zach. Zach, how are we doing today?
Hey, Sean, got the buttons clicking correctly. I'm doing great.
You're
How are
scared
you?
there.
Great
You
to see
scared me
you.
for a minute there, Zach.
Great to see you and everybody else. Thanks for being here.
Yeah, Zach, before we get into it, maybe give some folks, we probably have some newcomers here. Give some folks that are, I guess, new to Fundstrat, but also perhaps just new to crypto, some background on yourself as well as Grayscale and perhaps it's some of its history and what its role is in the space.
Yeah, absolutely. Great to be here with all of you. So Grayscale is the largest crypto-focused asset manager in the world, running a range of products from ETFs to private fund structures. We've been in the business since 2013, really started the Bitcoin Trust business with our GBTC product, launched back in September of 2013, so a long time ago in crypto terms, but really we are today a platform that covers the full spectrum of investable products in crypto, from Bitcoin to everything else in really the kind of frontier ideas of blockchain technology. I have the great pleasure of running the research effort here. I did 20 years as a macroeconomist on Wall Street, covering major macro assets, bond markets, currency markets, equity markets, these types of topics. And like many people, certainly including Sean, I became convinced that the crypto asset class was really the most interesting thing happening in macro investing, and likely to be for the balance of my career. So I couldn't imagine at this point doing anything else than covering these topics full time. So delighted to share some thoughts on what is one of my favorite projects in the crypto ecosystem, the Solana blockchain, today here with Sean.
Great. Love having other macro minds that also wade into crypto onto our platform. So maybe we have time, we'll discuss interest rates at the end. But I do want to highlight as I bring up some slides that will help guide the conversation. We do have an open Q&A box, so put your questions in there for Zach if you have any, and I will try to address some of them. Only the good ones though. Zach, maybe we have this Solana snapshot up here, but before talking about Solana specifically, could you maybe frame Grayscale's broader thesis on L1 networks in general?
Yeah, absolutely. And maybe just to make sure everyone gets up to speed, your audience, Sean's audience at Fundstrat, is pretty familiar at this point what blockchain technology is all about. But just the kind of one-line refresher, these are open source software projects running on networks of computers all over the world. That's what a blockchain is essentially from a technological standpoint. And Bitcoin is one example of those. Of that technology, open source software running on a system of computers. And Bitcoin applies that to a money system, to creating a sound money or digital sound money system, something akin to digital gold. That's what Bitcoin is all about. But of course, again, as your listeners, I'm sure, mostly are aware at this point, many other projects have expanded on Bitcoin's vision, particularly with what we call smart contracts. So smart contracts, piece of concept from computer science that allows us to take this simple idea of a digital money system and build much more complex ecosystems of financial transactions and financial applications on top of these blockchains. So Ethereum, Solana, these are two of the leading smart contract platform blockchains. They are really platforms for financial applications. And people are maybe not intimately familiar just yet with all of those potential applications, but they have very likely started to hear a lot of these associated terminology. So stable coins, tokenized assets, decentralized finance, these are the applications that we can build on top of these smart contract platforms like Solana. And we like to say that we're in a sort of mid 90s sort of place, if you will, with this technology compared to the internet as a whole. Think about where the internet as a whole was in the mid 90s. You were well past the very beginning of the story, the kind of hobbyist phase, and you were starting to see applications like web browsers that brought the mainstream online. And we think that's how you can characterize crypto and smart contract platforms like Solana today, that you're seeing changes, applications, regulation that are going to bring the mainstream on chain over the coming years. And I'd like to highlight the example of tokenization as really, kind of central to this vision. And I think something that is becoming an increasingly important part of the investment thesis for many of our clients. Tokenization just means taking assets, stocks, bonds, real estate, traditional assets, and putting them on blockchain infrastructure, putting them on Ethereum or putting them on Solana. And when tokenizing an asset, you get the benefits of blockchain technology, like global transactions, near instant settlement, potentially lower costs. And what I'd like to stress on this call, and really for the Solana investment thesis, is that we are at the very, very early stages of that process, really at the foothills of the tokenization revolution. The left-hand side chart here shows tokenized assets today compared to traditional asset markets. Tokenized assets maybe $30 billion or so. It sounds like a big number when you put a B on it, but really that's a tiny number, 0.01% or 1 basis point of global equity and bond market cap. So tokenized assets are going to grow a huge amount over the next 5 years. I would go as far to say that I personally expect about a 1,000x growth in the next 5 years in tokenized assets. I don't think that's an outlandish number at all. And as you can see on the right-hand side chart, Solana is one of the platforms that benefits from this. You see more tokenized assets on Solana. This will drive value to the Solana platform. It's a platform on which these tokenized assets live. Lastly, I'll just mention, Sean, just because it's topical, you saw some movement on this topic related to Solana just in the last week, where Kraken agreed to acquire Bakkt, which is a provider of the X stocks platform, a tokenized equity platform on Solana. So just speaking to the institutional investment in this theme on the Solana blockchain. So that's sort of the big picture vision. Blockchains, smart contract platforms are platforms for financial transactions. Tokenization, a huge part of that thesis, and Solana, one of the projects really at the center of that trend. So delighted to be able to kind of share some thoughts on Solana and to be offer exposure to the Solana Sol token through our ETF product.
Yeah, that's right, Zach. I think the big theme here is that I think a lot of people write off crypto because a lot of the trading volume is really in speculative assets that maybe don't have a lot of intrinsic value. But this trend right here that you just spoke to quite eloquently, I mean, this is a secular trend that I think we're going to continue to see expand. And what's going to make this infrastructure, these rails that facilitate custody, transfer, and trading of assets more valuable is the quality of assets that are on chain. And like you said, we're already seeing, I mean, you can already trade, a tokenized version of stocks. Now it is a derivative token, those X stocks, but, people are working on getting actual, stocks, tokenized. There's that the actual issuance of stocks tokenized on chain, and I'm sure a lot of that is going to happen on Solana. But as of today, you can already use DeFi on Solana to trade, that tokenized derivative of, NVIDIA, the S&P 500. And so, you mentioned Solana. I think you briefly mentioned how Solana has some special aspects as compared to other L1s. I think there are two things I want to highlight. Um, One is Solana's go-to market philosophy. And so, whereas Ethereum, initially prioritized decentralization, liveliness by, keeping low hardware requirements, limited block space, Solana took a different approach. They took a hardware forward approach and favored high throughput and more demanding validators in anticipation of hardware scaling over time. And they skate it to where the Moore's Law puck was going, or where they think it will go. And as hardware costs come down over time, ideally the network will be able to naturally decentralize. But the state of play is that, if you just look to the base layer L1, I think these two transactions pretty much say all you need to know. On the left here, you have fees versus throughput. You can see it really stands alone in terms of the amount of throughput relative to the costs incurred on chain. And here is average TPS year to date. This is observed. This isn't in some theoretical, controlled environment. Solana does have about 1,000 TPS year to date, whereas the second highest L1 has 129. And then the other thing I think is important to understand here, the big differentiator, this isn't necessarily positioning these two as better or worse, just a different, product, a different aspect of the product that differentiates Solana is its architecture. So Solana wants to establish a single global state, scale the base layer, and that is a lot different from Ethereum scaling strategy, which is more modular in fashion. It wants to, separate execution from settlement and consensus at the base layer. And what this does is it simplifies the experience for both developers and users. There are trade-offs here. Developers, will need to, within ETH, will need to choose between different development environments, need to be concerned with the potential for fragmented liquidity, solve for interop solutions. That those also, that interop and fragmented liquidity also applies to the user and the user experience. And so I would say the integrated stack, or some people call it the monolithic stack, does provide a more simplified UX for both developers and users. Now, again, ETH is doing a lot to solve for this, but as it stands right now, the architecture certainly provides a more digestible user experience, again, for both developers and the end users. And so downstream of that, we have seen, a lot of traction relative to other L1s on Solana. And you have some data here, Zach. Why don't you walk us through this?
Yeah, absolutely, Sean. And I think that's a great summary of what makes Solana stand apart from a technological standpoint. It is fast, it is cheap, it is monolithic or integrated, so you don't have to deal with some of that complexity. I would add, we didn't mention this in prep, but I think like things like wallet infrastructure also a thing that makes Solana stand out. It's just a very easy network to use. Is, in my view, the best new user experience in crypto. And that is borne out in the data, some of which you've already highlighted. It's possible to be a kind of fundamental equity analyst, of course, and look at company fundamentals to try to measure the health and quality of different types of stocks. what we do, what Sean and I do in our respective roles, we're basically blockchain financial analysts, and we're looking at fundamental data to try to understand the quality of these tokens, the investable assets that govern these networks. And I think it is possible to look at hard fundamentals in the same way that you would with equity investing. For blockchains, some of the key fundamentals are things like transactions, users, fees or transaction fees, fee revenue, capital, developers, number of applications. All these types of things can be thought of as sort of fundamental metrics for blockchains. And so when we're evaluating each of these networks, we look at the hard data to see where they stand out. And this is like where Solana really shines, and why I believe that institutional investors who are absolutely going to bring sharp pencils to the topic of crypto investing are going to really see why Solana stands out. And that's, this is a big table of numbers, so don't expect everybody to dig in too much depth. But the key is Solana is the third largest smart contract platform by market capitalization. But it really is the leader. It's the number one platform in terms of the hard data, in terms of the on-chain activity, the number of users, the number of transactions, the amount of fees that those users are paying, and maybe one other summary statistic: transactions per second. As Sean mentioned, Solana really stands apart. And just look at that final column, and the difference is scale of Solana versus everything else. It's not even really close right now. So, there are things that are more valuable from a market cap standpoint today, but there is no blockchain, no smart contract platform that is doing the type of economic activity today that Solana is doing. If we could maybe flip to the next slide, Sean. I think we have one, maybe it's two back, but the bar chart of fees we have in
Oh, sure,
here.
yeah.
Just to touch on that very briefly. So of these indicators, lots of different fundamental indicators. Our view at Grayscale Research is that fees, transaction fees paid, are the single most important fundamental indicator. So if I had to pick a kind of desert island indicator of blockchain health or application health, this is what I want to look at, because fees are hard to manipulate. It's hard dollar value exchanging hands between two parties. And it's also more comparable across blockchains than other things. And so Solana stands out on some of these other metrics: transactions per second, number of users, etc. But really fees, fee revenue, transaction fees is where it stands out most notably. Today, the Solana ecosystem, if you think about the blockchain itself and all the applications sitting on top of it, generates something like a little over 400 million in monthly fees, or about $5 billion annualized. So this is a kind of measure of the economic activity happening on Solana. And essentially you can think about it as like a little emerging market economy. That's what Solana is, producing about that much annual GDP. So it's really there's a lot going on here. A lot of real transaction and economic activity happening, and that's driven by the fundamental tech that Sean described, the design features of this blockchain, but really the sort of de facto performance in the data. Has this thing been able to bring in users, transactions, and fee revenue? To me, that's the most important question when investing in these assets. And the answer with Solana is a resounding yes. It has absolutely been able to take those design features and generate real economic activity resulting from it.
Yeah, and I like that analogy of it being an economy, and you could think of the fees as kind of the tax on the citizens that are using that infrastructure. And I guess just to highlight the some of the economics around the token, because obviously, token holders want to know what value is accruing to my token. So I think there are two things to discuss, and we'll expand on this when we talk about staking in a bit, but there are kind of two. Solana is a commodity, but a good analogy here is thinking about share classes, and there are kind of two share classes, right? Unstaked Sol and Staked Sol. If you're just holding plain Solana, you do get some semblance of value accrual from fees that are paid to the network due to this fee burn. So 50% of every base fee is burned, and you can think of that as, again, imperfect analogy, but a share buyback. And then, of course, the other share class, stake Solana, which I'm sure Zach you'll elaborate on in soon. You benefit from the base fee, obviously, but the entire base fee and the priority fee, as well as you keep up with inflation via issuance. And so I think that's just some good background for folks that are not well versed on the tokenomics for Solana. Um, and yeah, I guess I do want to make one other comment because I know everybody watching this is probably going to have, throughout this whole thing, they're going to be comparing ETH and Solana. I do want to caveat this, some of the traction, given the modular architecture for Ethereum. And I'm curious of your thoughts, Zach, on this, but it probably would be good to include some of the economic activity happening on the L2, the layer two layer for ETH. Of course, there are trade-offs like we just talked about around security and decentralization, but those are certainly appendages to ETH. But I guess a good counter from you would be, ETH still isn't seeing a lot of fees from those L2s, so perhaps it doesn't really matter that much. What are your thoughts on that?
There is a lot of nuance there. I'll maybe just say two things to keep it brief. I agree that Ethereum should be measured as the whole metropolis of activity that sits on top of it. All these layer two networks, partly not included because Base, the largest, doesn't have a token yet, and this is based on market cap, so not in this particular table. But yes, we need to think about Ethereum as this sort of broad ecosystem of chains, not just the layer one chain. The other dimension to it, again, like adds complexity, but Ethereum also could potentially be considered a store of value, similar to Bitcoin, a kind of scarce digital commodity with a high degree of decentralization and maybe has some premium in its price that's warranted because of macro demand for scarce commodities, essentially. That's how I think about it. But
Yeah, that's a good
absolutely
point.
competes with Solana for users, transactions, fees as a smart contract platform as well. And so I think that this comp is reasonable, but there's more dimensions to the story with Ethereum.
Yeah, no, that's a really good point. The monetary premium aspect, it's really tough to ascribe a set value to it, but
Yeah,
clearly, ETH and Solana to some degree do have some semblance of monetary premium as the native asset of their respective economies. Um,
exactly.
so yeah, I don't know. Maybe we could talk a bit about price performance. We have this chart from you guys. What say you about Solana performance as of late?
Yeah, so the story that I always want to tell with Solana as a kind of asset, and per price performance standpoint, is what doesn't kill you can only make you stronger. I think is it's really a story of resilience. It's not shown on this chart, but the Sol token, the Solana Network's native token, had a huge boom bust episode in the last crypto cycle. It was a very buzzy asset at that time, and the price got all the way up to $250 or so, and then fell all the way down to $10 in the last crypto winter. So we had this big boom bust cycle. Solana what had some adjacency with the bankrupt crypto exchange FTX. There was some funding and development work that had happened from FTX, and so when that exchange went bankrupt, Solana was one of the babies thrown out with the bathwater, essentially, and traded down all the way to $10. And I think many observers that were not very familiar with what was happening on Solana, questioned its viability, essentially, in that period. Solana now trading at about $130 today, so a 13x return from that cyclical low. It, of course, has come storming back. And as you can see, the purple line, Solana versus its peer group, which is the peach-colored line in this chart, it has hugely outperformed its peer group since that time. And I think that speaks to the points that we've already made here, that it has strong tech, fast, cheap, monolithic design blockchain that is great for users. The other thing that to me is part of this story is that Solana has kind of gone its own way in some respects, marched to the beat of its own drummer. I kind of mean a technical thing when I say that, without going too far in the weeds. A lot of blockchains have the same operating system called Ethereum Virtual Machine, or EVM. Solana uses something else called SVM, Solana Virtual Machine. Anyway, what that means is that it has a kind of dedicated community of developers and applications that even in the kind of crypto winter, were not quick to leave. They kind of stuck around this focused community. So the ongoing user interest and development work really allowed Solana to maintain its progress during the crypto winter, and has, of course, had strong price returns since then. So what doesn't kill you can only make you stronger. That's how I think about Solana today. It had a sort of near-death experience in the last crypto winter, but has came back stronger than ever, and now is one of the leading assets in the space.
Yeah, no, I couldn't agree more. I think its social layer is um,
Hmm.
very strong. And that was one of the reasons that going back to 2023 when it was trading, $20, $30, we were pretty adamant that it wasn't right to give up on Solana. We still viewed it as, the third major. And it's really that social layer that, like you said, didn't, give up when the going got tough. That really, led the platform to really be one of the few great trades this cycle. And they've done a lot to improve the platform. You said the wallet infrastructure has gotten phenomenal. We're seeing a lot of iteration and innovation on the DeFi front. And they've just improved the base layer in a number of ways. So maybe we could shift, we already teased staking. Um, Maybe you can give, viewers and myself, Grayscale's thoughts on staking and specifically Solana staking.
Absolutely. So what is staking? Let's just refresh on that. So staking is a service that token holders can provide to the blockchain. So I have my tokens and I can use them in service of the blockchain. Essentially what I do is I validate transactions. I make sure that the economic activity, the transactions that are being processed on the network are valid. They conform with the rules of the blockchain. And to participate in that process, I need to put my economic capital at risk. I need to show skin in the game so that I can be trusted. And the way that I show skin in the game is staking, posting, essentially depositing, all means the same thing, my Solana tokens. And so when I stake or deposit my tokens, I earn the right to participate in this process of validating transactions, and I'm basically servicing the blockchain. And in exchange for that service, I get paid in native rewards, meaning I get paid in Solana tokens, Sol tokens for providing that service. So Sean described earlier the kind of two ways to hold Solana. He described it as different share classes. I'll use that metaphor here. So if you don't stake, you're sort of in one share class, and there is some value accruing to you, but you're not getting any of that native reward. If I do decide to stake, I'm earning a reward on an ongoing basis. And these reward rates are quite meaningful now for Solana. So in big round numbers, and some of the detailed numbers are shown on this slide, you can see how they vary over time. But in big round numbers, Solana offers a staking reward rate of about 7%, often a little higher than that, but about 7% in big round numbers. So a quite generous nominal reward rate. Now, we tend to think of these things in the same way that you would think about currency markets. I would encourage people to think about it this way. When we look at currency markets, we think about both nominal interest or nominal yield on a currency position, and we also think about real or inflation adjusted yields, right? There are some economies that have really high nominal yields, let's say Turkey, but also have a high inflation rate, and so they might not have all that much real yield. When you start to evaluate different blockchain projects, I think increasingly people are going to start to use this terminology ported over from FX or currency markets. So Solana has a 7% nominal reward rate, and it has an inflation rate of about 4%, which means it has a real reward rate of about 3%. And so I think you can start to compare these numbers to other real yields across currency and bond markets to get a sense of how generous these reward rates are, and to more fairly compare blockchains across each other, because they have differences in nominal rates, but also difference in inflation rates, and therefore differences in real rates. So I would characterize Solana as offering pretty generous nominal reward rates and also a pretty generous real reward rate. Now, the last thing that I'd mention here is that one of the great things about the Solana ETFs, our GSOL, Grayscale Solana Trust ETF product, is that it is fully staked. So that 7% plus, slightly higher than that recently, but that 7% or so reward rate goes back to the ETF holder. So that's a great innovation that we've been able to bring to the crypto ETF products in the last couple of months. But that reward rate now is earned by the ETF holder. So you're in that share class, so to speak, to use Sean's terminology, when investing in Solana through the ETF structure.
That's great. And if I'm thinking about the spread here between nominal and real, this is really attributable to, fees and MEV and perhaps some compounding.
Yeah, that's right. These are annualized, compounded annualized yield measures here.
Got it. Great. Um, so maybe you just talk about the product. How about you give us an overview? I know we've teased GSOL as well, but what should folks know about what else should folks know about this ETF?
Yeah, okay, couple things. So, the point of the product is to give staked Solana to investors. So, a very direct way to get exposure to the Solana ecosystem through this product. You can see the key statistics up on the screen here. It's a 100% staked. That gross reward rate has been above 7% since the product launch, and currently the management fee is waived. So, in my view, a kind of excellent way to get Solana exposure. Maybe what I would add on top of it is, first off, this is not new for Grayscale. It's new. Regulators have allowed us to convert this product to an ETF to have that very efficient structure that's favored by virtually every investor. But we've been running this product actually since 2021 as a private investment trust for accredited investors. So have lots of experience with Solana ecosystem and with this product. And the innovation now is just that it's available in the kind of classic clean ETF structure. As Sean used the term majors before, many people in crypto think of the major assets being Bitcoin, Ethereum, and Solana. They are all now available in efficient ETF structures, and I think that's where many investors are supposed to start, is to own a small number of the leading or major assets. And Solana, now that we have that in ETF structure, able to give that kind of complete majors package. Now, many investors will want to go beyond that, but starting with BTC, ETH, GSOL, a great package of assets to build I think, a pretty efficient crypto exposure in any kind of diversified portfolio.
That's great. Just to double click on one thing, you mentioned that the entire fund is staked. Is that correct?
That's right, 100% staked, and we are able to do that because of the way the mechanics of Solana staking work. It is a fairly straightforward staking and unstaking process. There are more complexities in some other products, including Ethereum. But for Solana, the way that it's structured, we're able to 100% stake this fund, which is great. So that full reward rate coming back to end investors.
Great, great. And I don't know if you can comment on this, but in terms of access, is this distributed right now through most traditional brokerage platforms, or what should folks know about distribution?
Yep, just type GSOL into your brokerage account and it should pop right up. Just like any other ETF can go in traditional brokerage accounts, tax advantaged accounts, etc. And I think kind of complementing it with, say, Bitcoin and ETH into that majors package that Sean described, a great way to go. Of course, if you're just looking for exposure for Solana, of course, I think one of the leading projects in the space with excellent fundamentals, GSOL, a great place to start that process.
Got it. Now do we have a liquid options market on this thing yet?
The options market is just taking off recently, but yes, all of that is a work in progress, and we will have complete options. Over time, I think you'll see liquidity deepen, and you'll also see a proliferation of products that take advantage of that, covered call strategies, defined outcome, all of those types of things. As ETF investors are aware, there's constant innovation in this market. I think you will see some of that packaged up in ETFs over time. But yes, investors should expect a kind of complete options market around this product in the same way that that has developed for our Bitcoin and Ethereum ETFs.
Great. Good stuff, Zach. All right, we can take these down. I actually think about 40 minutes in. What do you say we open it up for some Q&A?
Yeah, it looks like there's
See
some
what our
good ones
viewers
in
have.
there.
You might have said this. When did GSOL begin trading?
In an ETF format, it was in late October, I believe October 29th of this year. And as a private investment trust for accredited investors was in 2021.
Got it. So there are a few questions here about the fees on Solana declining. I don't know if you want to, from 2024 through
Yeah.
today, I don't know if you want to take that. I certainly have some comments as well.
Yeah, I'll touch on it. Sean and I look at a lot of the same stuff in terms of fundamental indicators. Happy to hear your thoughts, Sean. But what I would emphasize to people is that there are variations over time, depending on what type of activity is happening on the blockchain. And there are periods of time where Solana has had, say, a lot of meme coin or a lot of NFT activity, and these kind of waves of activity drive fees. They drive transactions on the network, and frankly, they drive a lot of growth. They bring users, they bring developers. So I certainly wouldn't discount the importance of these things, but they come and go. These kind of periods of speculative interest, say on a meme coin, come and go. And so I would expect that type of thing to play out over time, that you have episodic periods where you have quite high fees reflecting some kind of activity like that. But then, the chain to transition over time to more long-term, steady, sustainable fee sources like stablecoins and tokenized assets. I think that is the vision here. But I think these periodic spikes in fees around a hot topic, a hot token, a hot NFT, that's probably something that's here to stay. A little bit hard to predict the timing. I don't know what you would add to that, Sean.
Yeah, no, you nailed it. I think, I alluded to this earlier, but I think a lot of people kind of look with a bit of disdain, or people on the outside kind of look down upon some of the meme coin activity or the speculative activity that happens on chain. But like you said, that could be cyclical. It could be centered around assets that, are entirely speculative, maybe borderline on gambling. But like we started talking about the outset, the goal here, the vision for these platforms is that there's going to be higher quality assets that are coming on chain. And so some of that cyclicality is going to be ironed out. And what you have to understand is that these fee spikes, these spikes in activity, this speculative activity, it's essentially a way to, you're using the speculative activity to farm users and test this product environment. And I think it has proven out very well how proficient Solana is at, facilitating capital formation, trading, asset transfer. And, I think it has led to a product that has a very salient pitch for institutions being performant. So yeah, I think
It,
it's
it, exactly. Yeah, I would just echo that. This activity, like meme coins, could be anywhere. The reason that they're on Solana is that it works. It's a very efficient chain, easy for users to access. It has that liquidity, has all the relevant applications, and so I think it should not be discounted that Solana has been successful on meme coins, NFTs, and that sort of thing. It's successful there because the technology is good. And I would just like to double emphasize that certainly it's a mischaracterization to say that that's all that Solana is all about. Tokenized equities is an example that we already touched on. Decentralized physical infrastructure projects, which are probably the thing that is furthest away from meme coin speculative activity, are also one of the things that you find Solana leads in. And so it's a diverse ecosystem, a lot going on. Meme coin trading and that sort of thing is definitely a part of it, and it's battle tested this blockchain. I think exactly as Sean described, brought it to a place where it's really ready for the institutional onboarding moment.
Yeah, absolutely. I didn't want to, I probably should have noted that as well, that there is some other stuff going on. But if you just want to pinpoint the rationale for those spikes,
Yeah,
I think
yeah,
that's a good
absolutely.
explanation. Um, so there are a couple questions here about, forward-looking catalysts or changes to Solana. I don't know if you guys have looked into that. Is there anything that folks should be excited about as it pertains to changes to Solana?
Okay, couple things real quick. Short-term Solana Breakpoint conference is this week. This is the annual event for Solana. It's in Abu Dhabi. A couple of my colleagues out there, I think we'll see some kind of short-term headlines, around that. Second thing, in terms of Solana specifically, there is a kind of technical upgrade happening. Solana is also already fast and performant, but they're doing something to the software that they call the Alpenglow upgrade. It's not terribly important, but basically making finality times even shorter for transactions. So another kind of level up on the ecosystem. Those are some of the Solana specific things. I would say in terms of price performance, it's going to be correlated to the broader kind of crypto asset class trade to a degree. Of course, I think it'll be a leading asset in that trade, but some of it is a kind of beta exposure to what's happening in crypto more broadly. And so what matters there? Well, it's sort of the usual things. Macro demand for alternative stores of value is a big piece of capital driving into crypto. But then also, and maybe most relevant for Solana, regulatory change, regulatory clarity in the US, driving institutional investment into these assets, into the technology related to stable coins, tokenized assets, etc. Grayscale expects that we will see a bipartisan market structure bill pass into law next year in the US. And I think that's a big positive catalyst for the industry and asset class, including for Solana. You look back the last couple of years, regulatory change has been a huge part of the thesis. 2023, Grayscale wins its lawsuit against the SEC. 2024, BTC and ETH ETFs come to market. 2025, Genius Act, lots of changes at the SEC. 2026, we believe, market structure bill, which is a huge task, will pass into law. So I think that we continue to be on this path of regulatory clarity and institutional investment in crypto. I think at a kind of really zoomed out level, that should also be considered a positive catalyst for Solana as one of the leading platforms in the space.
Yeah, people forget Grayscale started this bull market. Don't let
We
anybody
like to
forget
think
that,
so.
Zach. No, great summary. I guess just from a Solana perspective, specific perspective, I guess just a couple things to add. I think folks can look forward to, in addition to Alpenglow, um, which is a consensus upgrade. Next year, we should get a full rollout of the Fire Dancer client, which is just software that, is basically what validators use to interact with the blockchain. And, that should also increase performance. And also, there was a inflation reduction proposal that was just proposed a couple of weeks ago. I talked about that with clients when that was announced, but that should, if it passes, they might iterate on the exact numbers, but it should accelerate the disinflation process for Solana, which from a token holder perspective, so long as it doesn't result in a lot of validator churn, I think that should also be pretty constructive.
Agreed.
Let's see. There's a question in here about, and I'm not sure we talked about this, but I would like to get your thoughts on trade-offs between holding the token and the ETF.
Yeah, absolutely. Well, this comes up a lot, so let me just kind of clarify that. Why ETF? Okay, crypto is supposed to be about digital self-sovereignty. I have digital property rights for the first time. That is, maybe one way to articulate the core innovation of public blockchains is that you can have digital property that is yours and not on somebody else's record-keeping system, essentially. So why would I want the ETF? Well, the answer is just like all the usual investment-related stuff around cost and convenience and risk management. If I owning the Solana exposure through an ETF, a lot of my investment related issues are sorted out. Estate planning and rights of survival type issues, my tax recording, and all that stuff is done automatically for you. I can access tax advantage accounts if I want. So all that kind of classic tax and estate planning type of stuff is sorted out. Risk management around custody, the institutional grade custody from an asset manager that's been in this business for 12 years, as opposed to making sure you know how to do it on your own. I think a sophisticated user is able to self-custody their assets, but there are risks and education that needs to happen. And then often cost is a factor as well. If you're just buying a SOL token on an exchange, you may experience a kind of front end load, to use a mutual fund terminology, when buying that asset, and then additional trading costs if you move it around with the ETFs. Of course, today the management fee is waived, and so there's no cost today. But even when in examples where you have a management fee, these tend to be small compared to the potential cost of owning the spot token. So it's just solving a lot of convenience issues for me in the same way that other ETF products do, from a estate tax planning standpoint, from a risk management custody standpoint, from a cost standpoint. The ETFs are a good solution for most investors. So Grayscale, we deeply believe in the concepts that underpin this industry and asset class, including self-custody. And I don't want to discourage anyone from, if they have the right degree of sophistication, from thinking about self-custodying their own assets. But the ETFs, why we provide these products and why they're popular is that they solve problems for investors and allow you to safely, securely access crypto exposure in a portfolio in a familiar wrapper.
Yeah, what is a steady state management fee, and how long are fees waived for?
I believe it's 35 basis points and 3 months or 1 billion.
Got it.
It
Great.
is the waiver period, but 35 basis points is the steady state fee.
All right. Well, better act fast. Um, there's actually a good question that I actually am not sure the answer to. How are staking rewards remitted? Are they paid via dividend, or do they accrue to AUM?
Accrues to the AUM of the product today, and that we may see some variation on that for our Ethereum products, where we have two. We actually have one in each of each type, but for the Solana product, they accrue to the balance of the fund.
Great, great. I assume I mean, that is advantageous from a tax perspective, right?
Correct.
I mentioned this. There's a question here about the short-term blackouts that I think Solana did experience back in 2023. Well, 2021, some in 2023. And the viewer here asks, should folks be worried about Solana being less stable than other platforms? I have an answer to this. I'm just curious how Grayscale thinks about this.
Yeah. Solana is quite stable, and I think is a very effective network and has had very good liveness properties. That being said, if liveness and indestructibility is the only goal, then assets like Bitcoin and maybe Ethereum are further along that spectrum. And I think investors can think of the trade-off, to oversimplify, can think of some of the trade-offs in that way. We have performance on the one hand for making great consumer level financial transactions, and Solana has really chosen its design features to optimize in that direction. Bitcoin and to some extent Ethereum is complicated, but Bitcoin is maybe the other extreme. It's slow. The blocks only arrive every 10 minutes. The coding language is very simple. It's hard to do more than just send transactions, but that is by design, in the sense that Bitcoin is not going anywhere and is extremely difficult to disrupt. But so there's a kind of trade-off between performance on the one hand as a platform for finance, and resilience as a type of kind of commodity, digital commodity money on the other. And these different blockchains live across that spectrum. So I think you can think of them not as good or bad, et cetera, but like as different lanes, choosing different design choices. And ultimately, we're going to figure out as time goes on which one has the highest market value given those design choices. Like the market today is saying that the thing with the highest value is the slow chain, Bitcoin, because that store of value use case is an important one. But as time goes on and as we bring more of traditional finance on blockchains through tokenization, et cetera, some of these other design choices could achieve very high market value like Bitcoin. I don't know if anything to add on that, Sean. A complex topic. That's maybe a sketch of an answer.
Yeah, no, I'm glad someone asked this, and I'm glad I got your thoughts on it. And I just want to I agree with everything you said. Just would piggyback and expand upon your thoughts, saying that Solana and Solana developers have done a phenomenal job at improving the software, improving the network. And while yes, historically, it was particularly last cycle, you saw a lot of outages that lasted hours to sometimes a full day. We haven't seen any of that. We saw a minor one, I think that lasted about 4 hours, back in February of 24. But since then, there have been zero. And prior to that outage, I think it had gone 8 months without an outage. And so they're on the right path. I mean, there were a lot of I mean, Solana used to, like last cycle, they didn't have priority fees, I don't think. And that was a simple, addition to the protocol economics that, solved a lot of the issue. They made a lot of other iterations in the software since then. And so they're on the right path. And it's just, a matter of whether they establish enough of a history of liveliness that is suitable for institutions. I think you framed the trade-off quite well. But that also frames, I think, a question that we can end on. Folks, if you think about, again, going back to the majors, Bitcoin, ETH, Sol, we recommend allocations to all three in differing percentages through our model portfolios. So obviously we are bullish on both ETH and Sol, but I'm curious how you would, and of course you can't advise people on investment recommendations, but how should people think about allocating to ETH versus Sol in their portfolios?
Yeah. How I like to answer this, Sean, is to emphasize that public blockchain technology has different use cases. As some of that use case is a new type of digital money, scarce digital money. And some of that use case is a new way to conduct finance through things like stablecoins and tokenization. And you want at least enough diversification to cover those broad use cases. If you're just picking Bitcoin, you maybe not be getting enough of that financial services innovation aspect, which takes place on some of these other places. And if you just pick Ethereum and Solana, you might not be getting enough of that macro thesis, that kind of digital sound money that is primarily about Bitcoin. But all three assets, if you're holding them together, maybe with some others, I like to include Chainlink in this mix. So ETH, Bitcoin, Solana, Chainlink, we call that our crypto starter pack portfolio. It's another way to think about it. So those types of kind of at least lightly diversified crypto exposures make sure that you get not just the key tokens, but are diversified across the use cases, the kind of macro, digital money use case, and the kind of financial services innovation, disintermediating finance, a piece of it. Now, Ethereum, Bitcoin, Solana, they each have different flavors of these things. And it's a little bit hard to be precise. But I think if you have all three of them, you're getting the core use cases of blockchain technology. And it would be extremely hard to imagine a scenario where things like tokenization and stablecoins are wildly successful, and a portfolio of Bitcoin, ETH, Solana is not performing. I think you are able to capture there are lots of different tokens and lots of different alpha ideas that, Sean is frequently sharing with his clients. But in terms of the beta, having just those three assets is a very solid beta exposure. And I think Solana absolutely has to be part of that mix, along with the Bitcoin and ETH.
Yeah, and exactly. And look, if we're right about the secular tailwind, right about the trend of tokenization, it's kind of probably kind of silly to label, a winner take all at this point. If back 15 years ago at the start of cloud computing, you didn't have to choose between AWS or Azure or Google Cloud, right? he could just buy some of each and they all, siphon some element of that, some part of that cloud market share that grew to be quite expansive.
I think it's a great metaphor for where we are in crypto today.
All right. Well, Zach, I think we're up on time. Um, I guess to close things out, I don't know if you have any final message or takeaways for folks. And of course, if folks are curious to learn more about Grayscale, any of your products really, but particularly GSOL, um, where should they go?
Yep. Again, GSOL available in any standard brokerage account. Just type in the ticker, should pop right up. If you want to check out our website, grayscale.com, that's grayscale with an A, and the research is research.grayscale.com. So we don't hide well. Please come check it out, and we're happy to help on your Solana and crypto journey.
Great stuff, Zach. Well, thanks for joining us. Hope to do this again soon, and thank you all out there for joining us today. Hope you learned a bit.
Thank you, Sean.
Cool. Until next time, thanks.